180 points higher on the Sensex now, 36,254. The Nifty is once again back above the 10,900 mark, 10,913. The last few minutes have squarely belonged to the large caps, of course, the point that we've been making, the HDFC twins and a couple of other stocks. But the move is big for sure. Neeraj Diwan, Director of Quantum Securities, now joins us. Neeraj, hi, good afternoon. One of the stocks of the moment right now is SBI. Your thoughts on the way that's moved, and in fact the entire PSU banking pack.
Yeah, good afternoon, Anuj. Happy New Year to you and your viewers. Of course, the kind of move that we're seeing in most of these corporate lenders, and specifically PSU banks, is something that we have been expecting for some time. And after ICICI made a high some time back, and we were feeling that now it's the turn of State Bank to make the high of the year, though State Bank was not able to do that last year. I think State Bank, for that matter, and the full, corporate lenders should look very good. The kind of scenario we have in the country right now, low inflation, expectation that there may be interest rate cut, fuel prices are low. So I think this full scenario, the full basket of these, things are pointing to a good scenario for the PSU banks and corporate lenders. I think State Bank, of course, being one of the top picks there. And even if you go a little down, there'll be banks like Bank of Baroda, Canara Bank, where we feel that this positivity can be seen in the price movement in those stocks also, and which I think may continue at least in the beginning of the year till these things are playing out, which we just mentioned, like low fuel prices, low inflation, and the corporate lenders should continue doing well.
Okay, well, this move is such a move that you've got Bharti Airtel in pole position with a gain of 2.5%. So really don't know whether this is indeed how trends will play out in the next couple of days as well. But for what it's worth, there's plenty of green on the screen. Neeraj, a question on auto sales. I mean, numbers have been weak, barring what we just saw on Eicher. At least on the CV side, that number was very optimistic. But overall, how would you play a stock like Maruti now that the disappointment has continued?
In the passenger vehicle space, like Maruti, of course, the numbers there give you a picture of what is happening in the passenger vehicles in the country. And, we've seen a slowdown there, and that has got reflected in the price also. But after seeing a correction in Maruti, we see that Maruti stock is not reacting too much to these monthly numbers, because I get a sense that this may be something which is a passing phase, in which we've already seen the slowdown playing, and going ahead things may improve as far as Maruti is also concerned, because interest rates are again looking down. Like we mentioned, crude is again down. So these things may again start playing on the consumption, and the numbers may improve going ahead. So, if you get volatility because of the numbers, I think Maruti, for that matter, for an investment point of view, it still looks like a stock which can be bought on all dips. So, when the stock is still down from the high that we saw of 10,000, I think any volatility, any correction can be an opportunity there. Though, of course, the numbers are not great this month also. But as far as the CV numbers are concerned that we saw from Eicher Motors sales, I think if that is the kind of trend we see in other commercial vehicle manufacturers like Ashok Leyland, that can become a trend again, because we saw a fall there, and because of that we saw a fall in a lot of the auto ancillaries supplying to commercial vehicles also. So if their things are looking good, I think that can be a good investment theme for the short term also.
Okay, all right. Just hold that thought. On that note, let's get some more market opinion on 2019. And this is coming from Nirmal Jain of IIFL. He looks at the market from a sectoral perspective and also talks about the impact of potential loan waivers on the economy.
The first half, because these are on the election year, and the elections will be over in first half, and the new government will be, in power. So I think, you'll see a range-bound market with not much happening. I'm very optimistic about the outcome of the elections, and then I think the second half, therefore, will be very good because as people see clarity, then from a macro fundamentals, India is a great country. It's the fastest growing economy. Oil, as it is around $50 or even $50 to $60, augurs very well for our macro. And given all those things, I think second half will be very good and first half will be range bound. Broadly, first half investors will be cautious, and they should be cautious for good reasons. And second half is something when we'll have a clear trends emerging. From short-term perspective, it may be good for government, to get farmers, sympathy or a positive vote, and for the economy because the consumption-led growth. But that's not good from longer-term point of view. Let's hope that the new government basically takes more corrective steps which are structurally good for the economy, good for the farmers from long-term perspective.